Today was going to talk to you about how my investment challenge was going, but I'm going to shift it a little bit and go into February and ask you, is a 4.5% drop in a week bad? All right, so that's what we're going to check out today on my investment challenge. So January, the year of 2026 started out with a bang. I was like flying high. I was about 4% up. Um, and yeah, I dropped 4.5%. So 4.5% up um, is a smaller number than 4.5% down, because 4.5% from the higher number, right? So if you do 4.5% of a higher number, it is more than if you do 4.5% of a lower number, obviously. So I gained 4.5, gained about 4%, and then lost 4.5%. And so I've lost more in numbers than I had originally gained. So January is fantastic. The beginning of February, not so fantastic. So what does that mean? Essentially, it doesn't mean anything if I don't sell the stocks that are down, because I haven't lost money. I've only lost money on paper, right? So this is where, as an investor, I've really tried to build in um, my own kind of like reality checks, so that my risk reward tables kind of stay normal, and I'm not all of a sudden panicking when the stock market kind of takes over. So not all my money was tied up in stocks when I had this drop. Um, so I do have some money that I'm buying and selling with in February. So I'm buying and selling, and the buying and then selling for the 1% gain, which is part of my strategy, is what's actually gaining me money each time, so that I'm compounding, and having more and more money to put towards future trades. So every time I do $100 trade, I'm earning $1. Now, it doesn't sound like a lot, but I started with $50 and I'm doing $50 a month until I get to 1 million. So I'm on track, or I was on track, um, to do that in 6.5 years. So obviously going to be a little less on track than it was before, but the fact that I'm able to take the roughly $160, $170 and keep buying and selling it on a daily basis is a very positive thing. So once these stocks rebound, and to be honest, one of them, I'm not sure it's going to rebound right away, or even this year, because I looked at it and went, I think I miscalculated this. The turnaround on this stock, it had already dropped a lot. I felt like it was entering um, its point where it was below what its actual value is, and it wasn't quite as far down as I thought it might be. And the valuation for this stock might take a little longer for it to be realized. And there's just so much going on with trade in Canada, with the U.S., trade with China, trade with European Union, and different companies are adjusting in different ways, right? So it's kind of new, but it's still paying a dividend. It still has a positive outlook going forward. So this one stock, which is TRI, um, Thomson Reuters, yeah, it is perhaps not a great buy at this point, because it's really too close to what its actual value is. And I, for some reason, when I calculated it, got a little over excited about it, and it was still on kind of a downward slide, which hadn't leveled out. And yeah, these things happen. So I did this with a couple stocks, but that one being the one that was even, I guess, more disturbing. Disturbing to me, because I felt like it was going to be a good buy-in for my strategy, and it was a good time for it. Didn't turn out to be true, and what can I say? I'm now worried about it. So that is where it is. But on the positive side, all the buying and selling I'm doing with only $160 right now is compounding, and I'm buying and selling on a very regular basis. I've been getting 4 to 5 trades a week, and that has been good for the last week and a bit. I think the last 7 days I've had regular trades. So it doesn't quite make up for the amount of money I have tied up in a stock that's sitting there, but it does keep compounding my account. So it's not growing as fast as I'd like it to, but it's still growing consistently, and that is the main thing. I mean, when I talk about growing, I'm talking about more dollars that I can put into something, right? So obviously, when the stock goes down, the value of that stock is lower, but if I don't sell it until it goes back up, I will eventually see that money that I put in plus the 1% from those stocks that are still kind of dragging. Okay, so I have another stock here that is GSY, and it is Go Easy Limited. It's just been kind of floating, so that's a troublesome one, but it didn't dip a lot. Now, one that dipped a lot, let's just see here. It is ENGH, and that's Enghouse Systems Limited. It dipped a lot, and I thought I hit it at the bottom, but apparently I wasn't on the bottom. And so that one I felt like it had hit a bottom, and I felt like I was in the value range for it. And again, I might have miscalculated that. And these are not that I'm doing the math wrong so much as I'm rushing through stuff and trying to buy and trade when I should have just taken the time to do what I was doing. You know, it was in between shifts and it was like on the go, and I should have just waited till I could sit down and kind of go over things. So it was more of a rushing scenario, and that's it. So these stocks here I've mentioned, they're not, I'm not an advisor, so I'm not advising anybody go out and buy them, and I'm not saying that they're good stocks now because they've dropped even lower. They may not be good stocks. So I'm not advising anybody to take a particular stock. That is kind of how it is. I'm not an advisor, so if you need help picking stocks, go see an advisor. All right, so that is it. That is my scenario right now. I bought 2 stocks today, CCA and TF on the Canadian Stock Exchange, and they're both down slightly, but I do expect that they have opportunity to go up in the next day or two. Again, based on calculations I did, which were done a little bit better than I'd done on those previous stocks I mentioned. And that's it. So that's my investment challenge. I'm still on track to do, well, let's check it. Let's actually go in and check it out. But I am still on track to make my $1 million. And that is really the biggest thing for me. If I am not on track to do that, then I will be probably a little bit disappointed. Because, oh, what did I do here? That's not good. Okay, that's a computer issue. We won't worry about that. Let's go into Excel, check out my spreadsheet. I don't post this because oh boy, that's even worse. I don't post this because it won't make sense to anybody. Okay. I could try and make it make sense, but that's really not actually going to happen. So, oh, okay, this is all over the board. What's going on? Holy smokes. That's not good either. Okay. So I don't know if I lost my spreadsheet here or what's going on, but we're going to just hang on for a brief second. I'm going to let you know what's going on. It should be right here. Okay. Right, so this should be it right here. So let's go. We were somewhere around here. All right, so yeah, that's where I was. Perfect. So I'm 2, 3, 4, 5, 6. Yeah, 6 years. I'm still on track to do that. So that is fantastico. Let's actually let's put in this right now. Let's put this number in. I'm gonna put in what my balance is right now. 2, 3, 4, 5, 6, 7. Yeah, it only moved me back about 2 months. So 2031, which would be halfway through my 7th year, I should reach $1 million. Now that is taking into account what my taxes would be each year, and yeah, kind of snowballs after the 5th year, halfway through the 4th to 5th year, where I go from 100,000 up to 400,000 and up to $1 million. So if I am able to harness my investment challenge and my strategy, and it actually carries through all the way, I will be making that money. Now, I could be doing better than this if I was not wrapping up a whole bunch of money in a way that I have been, buying stocks too prematurely, and then not getting the turnover as quickly, because turnover is really the key. All right, so that's it. So make sure you click subscribe and like. I'm going to keep coming back with my investment challenge, let you know how that's going. My 1% gains are working on about 10%. No, yeah, 20%. 15 to 20% of my overall investment. So that's where we're at. We'll see you for the next video.